Thanks for watching Lessons in Minutes with Jaylee. Like, share, and don't forget to subscribe. Let's look at an introduction to preparing T accounts, also known as ledger accounts.
Let us look at what is an account. An account is a place where details of transactions relating to a particular asset, liability, or to capital is recorded using the double entry rules. We're now going to look at what is a T account. A T account is simply a T. It represents that capital T. On the left-hand side is the debit. On the right-hand side is our credit. Now, it is simply a two-sided form used to record in a simple way transactions affecting a particular asset of a business's financial activities. Now, please note that a T account is often referred to as well as the ledger account. So a T account is also known as a ledger account. Let us now look at the layout of a T account. So we're going to zoom into that. At the top of the T, you're seeing cash account. Now, cash account represents the title. Please note that the items affected by a transaction should have its own account. If the transaction affects cash and it affects bank account, then you'll need a cash account. So that's a T account for cash. And you will need a separate T account for bank. If the transaction affects capital as well as office machinery, you would need a T account, that is a ledger account for office machinery, and you'll also need one for capital. So each item that is affected needs its own T account. All right. Now, to the left of the T, again, that represents the debit, and the right side of the T represents the credit. Now, notice on the left-hand side, you're seeing date, details, and amount, and the very same thing on the right-hand side, date, details, and amount. So each side of the T account has columns for date, details, and amount. And this is important because as it relates to recording in the account, you'd record in entries. And for the entry, you need the date, the details, and the amount. Let us look at an example of an entry in the account. So on the left-hand side, you're seeing an entry. Now the entry consists of the date. So if you look at this, it's basically saying that this transaction took place on the 27th of November, 2022. The details, you're seeing J Brown. This represents the other item that is affected. So your details basically is a cross-reference to the transaction. It actually tells you the other item that is affected. So from this that we're seeing is that we're in the cash account, but we're seeing J Brown as the details. It simply means that the two items affected by that transaction are cash and J Brown. So J Brown that you're seeing right here indicates the other item that is affected. So the rule in writing your details is that you will be recording the other item that is affected. So again, we're within the cash account. Our details is J Brown. This is simply telling us that the other item affected is J Brown. Another thing that this is telling us is that if you go to the account for J Brown, you'll see the corresponding entry on the credit side. Okay? Now, you're also seeing the amount, and the amount is $50,000. So this is saying based on the transaction that the amount is 50,000. Now we could simply read the information coming from this account. where within the cash account, the details is J. Brown. This is simply saying to us that we have received cash of $50,000 from J. Brown. Now, on the left-hand side, where you're seeing the date, the details, and the amount, this represents a debit entry.
In our next lesson, we will use a question to demonstrate how to prepare T accounts. Like, share, and don't forget to subscribe.